Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. I'm trying to get my my chart to work over here. Hold on. Oh my gosh. No. All right. I don't want to be caught playing base nectar in public. Oh no, that's terrible. All right. Charts. Let me tell you, first of all, like something is up today because my market depth tape has, I could hear it from the other room, has been just going wild. So there's been some big orders, looks like mostly on the bid, kind of moving around and doing stuff. A lot of stuff. Come on, show me the little preview thing. There it is. All right, so here we got the treasuries. Very interesting. So the big news overnight was that Donald Trump has threatened a, well, I forget how much. Was it 10%? Something like that. Tariffs on Canada and Mexico, unless they do something about illegal immigration and fentanyl. 25%, Uzi says, 25%. And 10% additional tariff on China. And there's a little bit of panic from the markets. So it's kind of interesting in the treasuries. The treasuries moved down a little bit, but not that much. Not that much. And then they're actually kind of a little bit higher. So the treasuries did react to it, but not as much. The S&P 500 reacted to it. We had a pretty big downturn. But again, it wasn't, so it was bigger than the treasuries, but it wasn't as big as some of the moves that we've seen in the S&P 500 back during Trump's term when it was about tariffs. And the S&P 500 is now higher. Oil down big yesterday because of reports of ceasefire in Lebanon. Gold and silver still kind of, they took a bit of a hit yesterday as well. Silver's the way there's way more volatility in gold right now, man. Kappa's still struggling down there in the pits. Japanese yen, I'm liking this sideways action. That's good. Dollar down just a little bit today, and then Bitcoin coming off of its highs. They basically got to 100,000 and then very quickly came back. I would say though that the regulatory framework going forward still looks positive for Bitcoin, or like one of the biggest risks and one of the things that was really holding cryptocurrency back was that there's a lot of fraud and other things going on, and regulators are gonna catch on to that and do something about it, and they think that the Trump administration is going to ignore it. So that kind of seems to me. Let me tell you something. This is going to become a theme on this stream more and more. Bounded rationality. Okay, remember, people want to be rational, but there are very hard limits on how practically rational they can actually be. That's why it's bounded rationality. We want to be, but it's bounded. There's limits. We're not so smart. We don't know everything. All of these sorts of things. And so I think that you are going to see the bounded rationality playing out in front of you day after day on multiple subjects. So on the tariff thing, for instance. Okay, well, first of all, this announcement by Donald Trump last night seems a little bit like out of nowhere and impulsive, even for Donald Trump, frankly. But that suggests to me that this is a trial balloon. It's probably a trial balloon. He wants to see how the markets react to it. He wants to see if Canada and Mexico do any moves to try and, you know, oh, you're right. We're doing this thing. We should change that. Like, I already saw something. Yeah, Trudeau has already reached out to the Trump transition team to discuss border security. I heard that Mexico was changing laws. You know, in this situation, because it's interesting what he put as like the reason. We've recovered the best from the COVID economic stupidity, so we can basically get anything we want under the threat of tariffs. Maybe. But you know, in this situation, the thing that's interesting about it is that it was like fentanyl and illegal immigration is the thing that he's mad about, and not like, well, you guys have tariffs on our goods and yada yada yada, and there's all of these other different issues that we have. Like, that was, I think that was one of the big problems in China, was that, you know, we were threatening tariffs, and what did we want? Well, we needed to make some sort of a trade agreement. And the trade agreement that we'd have to make was like incredibly complicated, and both sides were really, really far away. And it was just too big of a gap to close in the time that Trump had. Whereas in this situation, it's kind of like, oh yeah, we probably should be doing more to prevent fentanyl from coming across the border. We should probably, you know, like it's an easy win for Canada and Mexico to you know, acquiesce to him. So it's probably a trial balloon. See how they kind of react. So I believe the market may be saying that they don't think that Trump's actually going to do it. I don't know. But in the longer run, the chances that we get to election day and Canada and Mexico haven't done some things to kind of try and placate him and prevent the tariff, very low. And then if he does actually put the tariff on, it would probably almost immediately be challenged in court. That one would be. So in the longer run, you know, like the big brain kind of play, I think, would be ignore it, because eventually it's going to turn out to be nothing, right? But bounded rationality is the markets are just going to do the knee-jerk reaction to it, right? So I wouldn't surprise me at all. I'm actually a little bit surprised that markets have already recovered significantly from the hit last night. I was kind of expecting we'd come in, we'd be down, everybody'd be like, well, you know, it wasn't too much damage, and then like prices just going down and down and down today. Maybe that still happens. So it wouldn't surprise me to see that. And when you see that, you might be tempted to think, no, like we should buy this because, you know, it's not actually going to happen. And that's where I would say, just remember bounded rationality, right? People want to do the smart, rational thing, but their rationality is bounded. So they might not do the big brain 5D chess thing that you think, right? So keep that in mind. Same thing with cryptocurrencies. Like with cryptocurrencies, I really don't think that the government essentially covering for fraud, or at least, you know, ignoring the fraud. But this administration, that's basically what's going on here. I don't think that that's really good in the long run, right? But bounded rationality, investors ain't thinking about that. They don't know that there's fraud going on. They just see dollar signs. They're chasing after it, right? So we're gonna have to, you know, be taking a lot of those trades where I think that the play is bounded rationality. Like, we think that we know better, but we know what people are going to do too. Right? Well, so I do have one thing that I need to do here. And that is I made significant changes to my cumulative delta, my cached cumulative delta yesterday. And so I want to add that. I'm going to take off Sims and I'm going to put on mine. And I will turn on the gray historical bars for fun. There we go. All right. Very good. Well, I think putting it on there. You know what? I think I saw that last night, but let's see what it does. I think that there might be one little bug in here where it goes back down to 0 for some reason. So kind of messing up my my zoom on the chart. You see that? It's like all the way up there because 0's down here. Well, let's see here. When the bar closes, does it fix it? So wait. Oh, very interesting. Okay, I know what that's about. I can fix that. I'll just move over to on each tick for now, and then yeah, I'll have to fix that later. I tell you what, it's gonna take a while. I think it's gonna take a while to make sure that all of the changes that I've made to the indicators this month are like fully tested and work. Like basic, I tell you what, I did not see this one coming. I maybe I should have. I'm not gonna say that I didn't see it coming so much as I neglected it. But like, basic caching, okay, I have some data, I save it to a file, and then load it back up the next day or whatever. Not that complicated. But caching and making it so that it works on bar close, that it works on each tick, that it works with and without tick replay turned on. All of these other kind of permutations that you can have on your chart becomes a really complicated thing. It becomes a really complicated thing. So I think I've got it worked out, but I spent a couple of hours on it. So now, with that said, I want to take a look here at our resting orders indicator. So what is this doing? Well, so if I look at the DOM, so here's the chart. We're talking about these two indicators right here. Okay. This is the old version. The new version is on bottom. Okay. So what we're doing is if you look at the DOM, okay, here in the 10-year treasury, you go to the very, very top. In Jigsaw, if you go to the very, very top of the columns, there's this number up here. And this number is basically all of these level 2 levels added together. Okay. Now, one of the things that's kind of interesting that you can't analyze with the Jigsaw DOM is that there's always orders stacking and pulling all over the place. And what is the actual, amount of that activity? How much liquidity is actually out there, right? So you could say, what is like, if we look at a price like 13, we could say, what is the maximum that maximum amount of liquidity provided at that level, and what is the minimum amount of liquidity provided at that level during the time period? And so the top one, the first one, what it does is for each level, it determines what the max and min is, and then it adds them all together. So that's where you get some of these data series. So if I come into the settings of the resting orders, there's like max bid, max asks, min bid, min asks, and then I also show the difference. So this is basically when you have all of the maxes, what is the difference between the bids and the offers? Are there more bids or are there more offers? Then when you go to the min, what's the difference? Are there more bids and are there more offers? Every once in a while, you might get a situation where the max is higher and the min is not. And that's an interesting situation, but it doesn't happen very often. Okay. But that's where you see here, there's white and then it's slight. I have a darker gray. That's what that's about. That's the min and the max. Okay. Now the bottom one is a different way of aggregating that information. Instead of saying what is the max and min at each level, I'm just tracking this top number right here. What is the max that this top number was, and what was the min that this top number does? Because you could have this thing where like there could be an order that's like 50 lots that is constantly switching between 12 half and 13, for instance, and it's switching back and forth. And so the max for this 13 will include that 50, and the max for this 12 half will include that 50 as well. But if we're only looking at the max provided at any one single time, then it kind of filters that out. That's why I called it resting orders filtered. Okay. And what I find, generally speaking, with these time series, and granted, this is not based on any kind of a study that we've done. We are now like collecting data right now so that maybe in the future we can do some back testing. But generally speaking, you will see that there are more bids or more offers on one side. And the market tends to go into regimes where it will either move towards the liquidity or run away from the liquidity. Octavius asks, are you using the top 10 best bid off or top 2 inside? So there is a property that allows you to choose how many levels that you're looking at. But for my resting orders filtered, I am using the inside 10 levels. Inside 10 levels right now. But you can set it to 0 and it will just include everything. Or you could change it to 2 and only see the inside 2 levels. Right. So what was I saying? Oh yeah, so like right now, it looks to me like they are kind of moving. They're in the mode where they move towards the liquidity. You see that there was more bids down here, and they moved into those bids. This move right here is probably just like post meta order mean reversion, right? Because I'm still seeing selling in the 10-year actually, even though it's kind of come up here. Okay. This one down here, this resting orders filtered one, I have the filter set to 10 on it. And the thing that I find with this one is that it will tend to be like, you know, all of the ones are on this side, and then it will flip the other way. And when that flip happens, it usually coincides with significant changes in the market. Those changes can be reversals, but they can also be continuations. But you'll notice like a noticeable change in the price movement when that happens. So this, I theorize, is a good indicator of like you want to take a trade. This could be like a good trigger, but then you would want to go and look at other information to determine if you want to be triggering yourself long or short. Now, granted, it can also do things like it is doing, I guess, today, where it crosses back and forth a lot, and then it's not really a good signal. So this, from algorithmic terms, what do we call this? I forget what we call this, but this happens with moving averages too. You can get in this market where, you know, price crosses the moving average a ton, and then, your algorithm just keeps getting triggered into trades that go nowhere. Well, not that go nowhere, but are like immediately reversed. So you can kind of filter that in certain ways. Like you have a re-trigger. Like if I get triggered into something, I can't re-trigger again for 30 minutes or something like that. Okay. So that's how I would use those resting orders. And it's just interesting looking at them coming in. Another thing that's going on today, you wouldn't know it from just looking at this bottom one. So now let's talk about this guy down here. So can I zoom out far enough to see it? Yeah. So you might notice that over here yesterday, there's a lot of, oh, can you see it? You can't see it because it's behind me. There we go. Okay. It's kind of jagged here. It's kind of jagged. Whereas this one is just like solid, almost a solid line. So what's happening is there's like a 700 lot that's moving around all over the place this morning that was not there in days past. We can see that in the largest resting orders. So that's kind of a useful thing. Like you always notice it on the DOM. I have the market depth tape to make sounds and show you the actual changes. But this one graphs it over time, so you can kind of see, okay, it's been doing this all morning and it's unusual. What does it mean? I'm not quite sure. But something's different today. Is it action in the market because of the tariff stuff? That's my best guess, at least. So interesting. Now, sometimes you will see really big orders pop up in the resting orders. It could be spoofs, it could be other things, but that tends to be, once again, like a trigger. Like usually changes come into the market then. I can't necessarily predict whether it's going to be a continuation or a reversal or what, but like stuff starts to happen. In fact, I would say that all four of these, the level 2 changes, the resting orders filtered, and largest resting orders can all kind of trigger, give you a sign or give you a trigger that something may be about to happen. But I haven't been able to work out any sort of way of analyzing them that tells you what that particular thing that's going to happen is. Market order and balance, on the other hand, is something that kind of more tells you which way it's going, right? Like if there's more buys than sells, then we're probably going up. And if this is like consistently well above 50%, those are the trend days, right? ZF just had a big MBO come in if you want to test it. I don't have it on the ZF though. So that's another interesting kind of point though. Like, so what we want to do is take all of these data series and make them features in some sort of machine learning algorithm, right? And the question is, in that machine learning algorithm, would it be better to just have it on ZN? Or would it be better to have all of those data series across all of these, the ZV and ZF and NZT for that matter? And man, I don't know. Like, is there a point at which you're putting too many features into the model? Or does it actually make it might actually just make it better? I don't know. But that's going to be something that we're going to have to try and learn in a couple of months. What do you think about correlation algos like between the S&P and the NASDAQ? Okay, well, so first of all, I think that correlations are something that are really important to pay attention to in the markets. I don't know if you necessarily need to have a correlation data series up, like if that really helps you a whole lot. What I like to do is if you come over here, I have all of these different charts on, and in NinjaTrader, there's like this crosshair that's global and global no time scroll, because I don't want it to start scrolling all of the other charts. So I do global no time scroll. And then I don't have it turned on this ZF, but then when I mouse over on ZN, you can see the lines show up everywhere else. So I can see, okay, so here was a pivot in ZN. Was there anything else that pivoted at the same time? Yeah. Well, the Japanese yen did, so which is what we'd expect. Normally the Japanese yen and the treasuries are well correlated. And also, you can't see it because it's on the other screen, but there's the dollar. The dollar had a big move up right here, and then since then it's kind of been down, and it pivoted at the same time. So it seems to me that these moves have been highly correlated with currencies, probably are more knockoff effects from the whole tariff issue, right? So correlations can help me determine why the market, what flows might be dominating a market, because I can kind of say, okay, I'm seeing the flow. This is buying, this is selling, this is buying. Does that make sense within the macroeconomic framework of the different theories about what could be moving the market, right? Now, there's also this thing that's like, if I'm trading in ZN, there's a heavy correlation with the Japanese yen. So if the Japanese yen ticks down, there's a very good chance that ZN is going to tick down as well. And the way that you will typically see that happen is the bids will just pull. The market makers, they say this is like the best price based on the correlated assets. And since the correlated asset just ticked down, I'm going to cancel my bids here and I'm going to start bidding at this next price down, or whatever the deal is. And so I kind of, when you're seeing movement largely on pulling, then I'm going to be looking for that. It's probably a correlation. Or another one is if I see the market holding a clear range, I'm going to be looking for, okay, what's the correlated asset? Why is that range holding? Because that can potentially tell me when the range is going to break, right? You know what? People have asked this question all the time, and I've never put them together that this could be an answer to their question. But correlations, if we're in a range, how do you know when the range is going to break out? Or you get a breakout, and like, is it a legitimate breakout? The way that I would analyze that is, what is the correlated asset that is causing that range? And if I've broken out of that range, have I seen a change in that correlated asset? And if I haven't, then maybe it's a false breakout, right? Okay, so correlations are a really important thing to understand and watch, but I personally don't use them as triggers for trades, but rather as information to help me understand what's going on. Now, you can use correlations as triggers for trades, but to play that game, you have to be very, very fast, right? Then you're getting into the world of statistical arbitrage. So what I do instead of trying to play the statistical arbitrage game is I watch the algorithms that are playing the statistical arbitrage game and, gleaming what information I can from how those algorithms are behaving. Octavia says I look at the whole strip, but I look at TN and I look at the whole strip, and I have the DOM up for all of them, but is it worth it to have my indicators on the whole strip? That's, who knows? Who knows? So I suppose if you're looking for things like, are there large orders? moving around and stuff like that. Then it would totally make sense to use this largest resting orders indicator and have it on all of the different assets, right? But I'm trying to work out if a machine learning algorithm can combine these things, these filters together to find, some sort of a I think I want to combine them together into a filter that just says, you should go long or you should go short, and not necessarily as triggers. This is, well, maybe I should be spending some time right now on this. One of the issues I've had is like when I've been programming, I will like refresh the chart a ton of times, and then that kind of screws up the data for that chart, and I don't like that. So we want to avoid that. But I'm not going to mess with the chart. We could just be programming an algo per se. But one of the things that I've been kind of wondering about is like, have I been looking at entries and exits wrong? Like, if I got a signal to go long, maybe that's not, we should just buy it right then and there. Maybe that's, we should put a limit order 2 to 4 prices down and see if we get filled, right? Or maybe the same thing on the other side. I'm just kind of messing around with it, with different kind of ideas along those lines, because generally what I find is that if you take a trade and you have a set stop and a set target, the results of that strategy will be dominated by the random possibilities that are created by the market volatility. So like whether, your risk reward will tend to come out to a break-even thing because of those set stops and targets. So basically using set stops and targets kind of makes your strategy random and kind of ruins the strategy. So then you want to take a different approach to it. Like, instead of having a set stop and target, you have a time frame. You enter the trade, and then you stay in the trade for 30 minutes. And at the end of 30 minutes, you get out. And then you go and you look at the outlays, the results of that. And do you have a situation where in that 30 minutes, it tends to go further in your favor than it tends to go against you? And now you've got something to work with, right? Let's see here. I saw the new video with Ninja. I don't know what you're talking about, unless you're talking about when I was on their live stream. What about ADL to algos of T? What does ADL stand for? The Algo Design Lab. Using a simulated matching engine. Well, I don't know. I've never used that before. TT certainly has some powerful features, I tell you that. And Stefa's comment now has me like, I didn't put a video out yesterday, though. Order flow strategies, a deep dive into futures trading. Oh, no. What's that from? Oh, yeah, this is Ninja Trader. Oh, no, that's interesting. They, oh, now that's really interesting. I see now. Yeah, well, I was on their stream like what was it, 2 weeks ago or something like that. It looks like that they cut it out and turned it into a video. I don't like the way that I look in that video. It's because I'm a little bit too like. Interesting that they did that. I didn't know that they were going to do that. Wait, so did they tweet about it? Let's check. November 12th. It's good though. And what was I talking about on that? Oh yeah, I was showing them all of the different indicators and I showed them the backtest. Yeah. Dude, I like the having the indicators in a backtestable state now. Yeah. It's really exciting, man. Like how long has it been where I've kind of been like working on these and it's like, well, yeah, but like the big problem is that there's still this issue where they don't work correctly when you're doing a backtest, right? And now I've sorted out all of those problems and we can actually do it. And like right away, it seems like that we found a useful piece of information. It's kind of why I've been a little bit more hands-off lately, is because I'm anticipating the rollover. By the way, something that just reminds me, we should check the next contracts. Are we seeing liquidity in the next set of contracts? ZN and... All right, we're back. You still with me? That's interesting. Okay, we're getting data again. Huh. It is. Oh, interesting. Oh, but today is 3 days before the roll. See, I was wondering, like, does it change because of the holiday? But if you go Thursday, Friday, Wednesday, and then today before. So let's roll. Let's do the roll. Let's do it right now. Can you guys hear me? Are you with me now? Okay, you guys are saying yes. ZF. So the liquidity looks a little bit better in the March contract for ZN at least. What about yields? Yields, I would probably leave those alone until Friday. Like you will see people start switching the day before, but I don't know what they'll do for tomorrow. But right now, the liquidity in the yields looks okay, so I'm not going to mess with that one. Okay, but we have found that going into the like the couple of weeks or maybe even the whole month before the rollover, that order flow signals seem to lose their power or if not be opposite signals. So that very, very preliminary data sort of a thing, but it does kind of line up with something that we kind of feel like we've been seeing for a long time. So I think that was a significant result. So it's really exciting that like we finally get this thing to the state that we wanted, and like we're immediately seeing results from it. Okay, so that kind of screwed up my resting orders. What's with that? Let's see here. Bar that's out of range. Interesting. Wait. If I refresh, does that fix it? Yeah. Okay. Oh, but then my level 2 changes disappear. There's a bug with that. That's weird. So level 2 changes was not writing, essentially. Where's my notes here? Nope, not that one. So there is still a little bit of work to do before I want to push the latest update to you guys, but and I've definitely, you know, I did a lot of research and looking at things over the weekend about what we wanted to do with the indicator, and you know what I've been doing on the stream and all of those things. And my conclusion is that we should continue to try and build up and grow the indicators, which primarily means starting to advertise them really hard. It's always kind of been like a word of mouth thing, and like, let's get them working, but now they're finally to the place that I've always wanted them to be at. I want to expand it, because we have, I mean, it's really kind of a little bit wild to think about, but for a retail trader, this is you want to do this kind of testing. This is the only way. This is the only way, and it's a very powerful feature. It's a very complicated feature. I don't think, you know, I think that if NinjaTrader themselves was like, oh, well, we should include this in NinjaTrader, I think it would take them a long time to get it working right. It was a complicated feature. So like, we've got an advantage. Now we've got to push it. Push it while we're collecting data. So, oh, and you know, I should mention, if you're new to the stream, and you know what I'm talking about, these indicators that we have on my chart over here. These are indicators that I provide. Okay, there's something wrong there with my market order imbalance as well. That's a little bit weird. Okay, these are indicators that I sell at speculators.com. I've made some changes and I'm debugging them. I don't know what happened there with that market order imbalance. There's got to be some offset on them, because essentially what just happened there was that it says that what happens is it will add the volume from the latest bar, and we'll take the volume off from 10 bars ago or whatever your look back period is. And there's, you know, when you take off all of the volume from the past periods, then it should just come back to 0, right? But somehow it's becoming a negative number. So there's a bug. There's a bug somewhere. A bug that you won't see in the version of the indicators that I have on the website. But I made a bunch of changes yesterday. That must have screwed it up somehow. You ever analyze the shape of the level 2 data, like skewness and kurtosis? So I don't know how you would be analyzing the level 2 data in a way that would give you statistics like that. could look at like the imbalance between bids and offers. Is there skewness or kurtosis to it? Probably isn't kurtosis to it, but there might be skewness, like there tends to be an imbalance in favor of bids. Right. Anyways, okay, so I let myself get distracted. I was like saying something and I didn't get it out properly. So if you're new to the stream and you don't know what I'm talking about, I created these indicators. The big feature of them is that they cache data and allow you to analyze market depth and then save it so that you can do back tests on it later. And you can buy the indicator suite at speculatorset.com right now. It's only $100. We're talking about increasing the price of it so that we have budget for marketing. So if you're interested, I would do it sooner rather than later. Okay. And while I'm at it, you might also want to check out the links that we have in the video description. Have a Jigsaw affiliate link, which is the DOM software that I use. Actually, we have a new affiliate link that gives you $100 off right now. So that's nice. Let me go grab that. I think it's this one right here. It's the holiday deal. So this week only, you can buy Jigsaw $100 off with that affiliate link. And then there's also links to my socials like Twitter and Discord. So make sure you check out the free Discord. There's also a $3 Discord if because you kind of get bothered by robots on any kind of public free Discord now. So we've created a private Discord as well that has some good stuff on it. Should probably post when was the last time I posted the crypto chart? Did I do it on Friday? Let's see here, media. Oh, 15 days ago. Yeah, I'd say it's time to post it again now that we're at 100,000. Why don't I do that right now? Open up. I need to like rebuild some scripts here so that it's easier for me to run this. But I wonder if this is, you know, like my Bitcoin valuation right now is starting to show things are a little bit stretched, but not too bad. But I'm kind of wondering what's going to happen here with this new administration and the bull run that we've had. Like, do they are now at 100,000 and they kind of rest on their laurels and kind of let things rebalance? Or does it just keep going and we get another mania? And like, if we get another mania, you know, could this be a mania that actually stays around for multiple years and takes our valuation level to like a really insane level sort of a thing, you know? put it over here, didn't it? Yep, there it is. It's getting to those levels. It's getting to those levels where, like, you know, major top imminent sort of levels. I'll tell you that much. You want to go look at the chart. I'm not going to show it to you. You want to go look at the chart, go pay for the $3 Discord. Oh yeah, I guess another thing I should mention is that we decided to push the video we were going to release yesterday back. It was actually ready to go yesterday. I had a thumbnail. I don't know. I kind of feel like I could get a better thumbnail though. I think that our idea on the thumbnail isn't good enough. But you know, it's a shortened holiday, so I was like, let's just do it next week. So we'll do it next Monday. Let me show you. You guys want to see the thumbnail? Where is it? Oh, yeah, like this. So now I'm just not feeling that one. For some reason. Maybe it's because he chose like a sad face. I think you want one that's like really animated and mouth wide open and stuff, right? We'll look around for maybe some better inspiration. See, this one is way better. Ooh, I like that. I'll send a picture of that one. Do that. Okay. Yeah, the treasuries really died down there, didn't they? Yeah, I think this aberration here was basically 10 minutes after we stopped. Yeah. That's why it did that. I'm going to have to look at that still. The one that really bothers me, though, is that the level, when I refreshed, the level 2 changes disappeared. So it's either not saving the data for some reason, or it's not loading it back up. But, you know, some of the changes that I made to the base class, there might be some parts that are missing that I need to stick over into here. Treasuries do look pretty dead. The S&P 500 is starting to gear up, and it looks like that it might be a sell on the open. I think I'm going to, you know, I'm supposed to be trying to take more trades in the S&P. Do I not have cross instrument trading turned on? I guess not. I'll take a $5 here at 20th. Oh, I know why. It's locked and everything. Because we had to rebuild our workspace. Order column. Put it over here. There we go. And then unlock it. Come on. There we go. All right. If we're so lucky. Oh, no, not like that. There we go. 5 volts. Okay. Treasury's seeing a little bit of pressure here. That's interesting. Am I going to get a fill there in ES? Just barely didn't catch it. Okay, so there's on the open, there was a little bit of a buy. Not looking so good at the moment. Looks like maybe, well, how much of a buy is it? Yeah, I'd say that's enough to scare me out here, I think. I'm gonna hold on for a little bit here. Just set a stop. Just in case it gets a little too fast for me. I think I pushed my luck a little bit too much. It came back to 50. So I am seeing a little bit of activity over there in the ES. It kind of suggests to me that they're kind of watching to see if the stock market decides to panic more or not. So the future says cheeseburger. Was it too quiet? You couldn't handle it. Ooh, ooh. Nah, that's definitely gonna stop us out now. Come on. No, really? Okay, well, you give it some time, but still. That selling ahead of the open made me think, they're gonna continue to sell it because of the whole tariff thing, but this first 5 minutes kind of suggests that theory was wrong. Wow. I don't like staring at it. The S&P 500 DOM is just can really start to mess with your mind. Clicky clicky, what's that from? It's from the treasuries. A relatively large lot on the ask, stacking, and pulling. Yeah, interesting. Okay, okay. They gonna breach the low? Okay, now the big orders are a little bit further out in the treasuries. That's interesting. I got 14 and 18. And there's a little bit more liquidity in the treasuries as well. So the treasuries are kind of giving me some hints that they might want to do something. Okay, so they did reach that low. I may, as of yet, take it off at 100, but it came down so quickly that I thought I should move it. You haven't reached a new low in cumulative delta yet, so keep an eye on it. Wow. Okay, so there was a huge spike there in oil. Would you recommend trading Bitcoin with Jigsaw? I would not recommend day trading Bitcoin in general, but if you want to day trade Bitcoin, you can do it with Jigsaw. You can do it with the CME futures, and I think that they even have a crypto connection. I haven't tested their crypto connection, but you know what? There are some really interesting things that you can glean in those markets with the DOM. Some interesting things that you can glean in those markets with my indicators. But day trading Bitcoin, man, let me tell you, it's day trading Bitcoin is a disaster waiting to happen. I've met so many people, especially when we first started live streaming back in 2017, because you know my Bitcoin oscillator valuation oscillator was very popular back then, because we had a huge starting live stream with the Bitcoin futures going live and all that stuff. And so I was talking to many people at that time that were day trading Bitcoin, and they were doing so well with it. And then when the Bitcoin market collapsed, they got destroyed so quickly. So, you know, really, when you think about day trading in particular, what you're trying to do is you're trying to predict future orders. So what kind of information do you have that is actually effective at predicting future orders in Bitcoin? Because you're trying to predict the actions of a select number of whales, essentially, like Michael Saylor. Can you predict the exact timing of Michael Saylor buys? Because it seems to me that that's like the whole of Bitcoin price movement right now. Right? And if something happens, are you going to be in the know that Michael Saylor is going to have to sell? Because I don't think that I will. I'll be there and I'll be laughing when it happens, but I don't think that I'll be able to predict it when it happens. It could be years from now. And that makes day trading Bitcoin a very precarious proposition. That's Durban. Where is this? Hold on. Yeah. So I would refer you to the Ferengi Rules of Acquisition, rule number 44. I don't know if you can read it there, but it says, never confuse wisdom with luck. Just saying. Especially since you're saying, oh, I've been using this chart. So yeah, exocharts. Oh, is it exocharts being dumb? Oh, okay. Then why is it called exocharts? Must be primarily a charting platform, but does include DOM, I guess. The funny thing about the technical analysis side in Bitcoin is that I have seen a little bit of evidence that there are different types, or that the cryptocurrency market reacts differently to specific types of technical things. Man, this is going to come all the way back up and stop me out, huh? Let's increase our risk here on this, huh? Let's look for 250. I don't like that it's doing this sort of thing that makes me think that it's but maybe a fake false breakout. The S&P 500 does not look to me like it's ready to trend. It looks to me like it's probably still going to be a bit of a mess. Anyways, so I've seen some evidence that Bitcoin seems to react differently to technical analysis than other markets do. And so basically what's happening is like everybody that trades Bitcoin believes very heavily in technical analysis. And so the market reacts to it because of those beliefs in it. But then that also means that there's so many people trading it that, you know, it kind of washes out that edge. And so I think what kind of happens is you're fighting for an edge on like these moving average crosses and all this sort of a thing. And then one day, you know, it comes along and the market just drops 20% all at once and all those guys get destroyed, right? Zero Hedge reports Mexican President Sheinbaum says migrant caravans are no longer arriving to U.S.-Mexico border. I'm of the view that we'll reach an agreement with... We're seeking to meet the U.S. as soon as possible. Oh, well, that's probably pretty good. Maybe we should take our trade off. The market doesn't seem to be reacting to that one, though, does it? Well, maybe that was why we turned back up. Maybe you know, that move has already happened and we're getting it late. I was hearing something on the news squawk just as Uzi tweeted that too, but I think it was about something else. So they made a new high by how much there? 2 points. 2 points and then came back to the middle. Yeah, let's see here. Uzi telling you every other WEF schlonging globalist West country is weak right now and the tariffs scare the pants off of them? Well, I think that that's probably true. I mean, again, going back to what we were saying earlier, the ask that Donald Trump is asking isn't a huge one, right? If it was a huge ask, it might be a different kind of a problem because certain asks kind of like screw them over either way, right? Like you could get screwed over by tariffs or you could get screwed over by like losing your entire economy because those tariffs are your own tariffs are kind of propping your economy up, you know, like. But hey, just stop the trafficking of fentanyl. Yeah, there's plenty of things that they can easily do to make the, you know, to show the United States that they're taking that seriously. So but like this other one, like oh, we're gonna do 10% on China on top of anything else. That one's, I don't think China's gonna play ball. Like, China is really weak right now, but that kind of almost, they're so weak that it almost kind of turns it into they've got nothing to lose anyways, right? Things are already shit for us. We can probably, you know, we're hunkering down either way. Will the tariffs really make it that much worse? I guess we'll see. Because, you know, for the things that the administration was asking last time around, like the trade deal that they were asking last time around, I don't think that China will be any more inclined to make that deal than they were. So that's one where I'm like, what are the chances that on day one Donald Trump enacts an executive order that puts a 10% tariff on Chinese goods? And I don't really know how to express that in a percentage, but let's just say that that percentage chance is substantially higher than the chance that he will implement the Canada and Mexico tariffs. Yeah. Okay, so about 30 seconds, new home sales and consumer confidence. Should note we have a 5-year auction today and FOMC minutes. Wait, aren't FOMC meeting minutes usually done on Wednesdays? They must have changed it because of the holiday. I'm a little uncomfortable though, holding ES and going into that kind of, it's not huge news. I think we're okay, but I'm a little bit nervous about it. The treasuries are certainly pulling for it. Okay, so consumer confidence is lower than expected at 111.7 versus 111.35 expected. That's higher than expected. I'm a little bit confused. Okay, Richmond Fed composite -14 versus an expected -11. New home sales changed really bad, -17.3 versus -1.8 expected. So the treasuries are maybe popping a little bit on that. Okay, I was looking at my charts. I've rolled over my DOM, but I haven't rolled over my my Ninja Trader charts. And so I was looking at it like, that price doesn't quite make sense. They did pop all the way back up to like this 17-ish range. But it was a very short-lived pop so far. And the S&P 500, we've basically got like a really gigantic doji right now. Maybe slightly negative candle, but it's got huge wicks on both sides. I am seeing, so the Japanese yen looks a little bit more like it's possibly reversing. So I'm trying to wonder, does that news and the flows that I've seen off of that news really enough for me to want to take a trade in this treasury here? I'm not so sure. Oof, the menus were starting to catch a little traction there, and they just got slashed back down. It's probably just noise, but it was still entertaining to see. I was like, no. Ah, yes, that's awesome. Okay, so the treasuries were popping up a little bit there, but then now they have continued on their southward journey, not necessarily driven by super strong volume. Actually, this is a really unusual case here in the treasuries, because not only was there not really strong volume in it anywhere along the curve, I don't know, was there strong selling in ZT, that the one that I don't really have up? Do I not have that one up on here at all? No, I do. Where's my chart of ZT? ZT. Okay, maybe there's a little bit more in ZT than the others, but still not as much to justify as big of a move as we've had down. And there's not a correlation with the Japanese yen either. There is, however, some correlation with the dollar moving up. So that strongly suggests to me that it is a tariff trade. That somebody is selling the treasuries on the anticipation that tariffs will increase inflation and make it difficult to reduce interest rates. And it seems to me that the trade is being taken specifically in the treasuries, because I'm not seeing the equities really get cut down yet. The equities might come later. But they just how much did they come down from there? 8 ticks? 9, 10? Ah, they're getting slaughtered. Well, I'm sure glad that I didn't take that possible long. Like, is this, remember I said, is this enough for me to take a long? I'm not sure. Now we give it a little bit more time and we can kind of see what's going on. Well, now probably what's going to happen though is like this is the point where like everybody goes, "Oh, I see what's happening. I should go short." And then you get stuck, right? Okay, so now I'm seeing more of it in the 30 year. So interesting. Huh. So that's also very confusing. Dude, there is a lot of things about this move down in the treasuries that is a little bit unusual, and I'm not sure what to think of it. Because the other thing that we're seeing right now is that the treasuries are flattening substantially. I think that flattening makes sense in terms of if it's a tariff trade. If it's a tariff trade, as interest rates go higher, we've tended to see flattening. But the thing that doesn't make sense to me is that I seem to see a much larger move in cumulative delta in ZB than I do the other instruments, even though, ZB didn't move down as far as the others. You say that the 5-year is moving the most? That might, like, in terms of actual tick, like adjusted ticks, maybe. I'm talking more from a volume perspective though, right? So I'll just point it out on the charts here. ZB moved down quite a bit. ZN hardly any selling. 5-year teeny bit. And then the 2-year, well, the 2-year had been selling all this whole time. So it's just that, like, for a move that dramatic, you would expect to see pretty strong decline. Now, maybe it's because I don't have my charts rolled over in Ninja Trader. That must be it. That must be it. But watching my DOM, I didn't see a super huge change in it. So, but perhaps a bunch of these things that I'm saying that seem unusual could be attributed to the roll for sure. Certainly could be the roll. In fact, I think that's probably the best explanation, probably. So it's still a little iffy over here in ES. It looks like that overall, maybe the sellers are winning, but it's super close. some more in the treasuries, this time on the bid at 07. In the old contract, that is. When you say 09, is that in the old? That's in December contract, right? Is that so? It seems to me that they are rolling over today, and there's a case to be made that there's actually better volume and liquidity in the March contract than the December one. Now, interestingly enough, look at our resting orders filtered on the old contract. It's just all over the place. That's not typical. So is that another interesting behavior of the book that we're seeing primarily because of the roll? So they came close to a new low there, but they came just short of it. It looks like oil is calmed down. I'm still not quite sure what the headline was in oil. Russia and Iraq had some talks. Okay. I mean, I would assume that it's something Middle East driven, right? I just didn't quite catch what it was. And the problem is that Twitter is not the source of information that it used to be. It's just undeniable at this point that a number of significant contributors in our space have left. Unfortunately, you can't just move over to Blue Sky and then everything's fine. So that just means that our ability to gather information from social media is just not as good as it was 4 years ago. I wasn't on the stream, but did you see how they accidentally had prior consumer confidence as 2.1? Oh no, I did not see that. My source did not have that. It had consumer confidence 111.7, prior 111.35, or sorry, expectation 111.35, and prior 108.7. Conference board of the report had to quickly read. That's interesting. So you think that some algorithms got screwed over by that? Although I don't know if that explains any of the moves in the markets. Like I think that the Treasury's kind of popping a little bit on the new home sales in particular made complete sense, and then it quickly got wiped out because they want to sell over tariffs. I think. Seeing Future says it was cut too quick. Okay, and maybe Zero Hedge will have a story about it later. Maybe they have a story about it now. NATO revives talk of sending European troops to Ukraine, warns business leaders to prepare for a wartime scenario. New home sales crashed in October, the largest month-over-month drop since July of 2013, says Zero Hedge. Wait, what? Is the U.S. considering a gold-backed treasury instrument? You gotta be kidding me, right? The disinversion of the curve is what really... that's the sort of stuff that I want. Oh, come on, you're so close. You're so close, buddy. You can do it. I believe in you. I don't know if that's the tack I should be taking when it's selling, though. Crackle, crackle, crackle. Some bids kind of repositioning themselves down below us. Well, interestingly enough, after the treasury's dropping like that, it's kind of been sideways and not a lot of activity. So again, like the way that it's acting is kind of like that it moved based on some correlation or something like that. But I don't really see the evidence or the correlation that it might be following. I'm trying to decide here in my mind if this goes to my profit target in ES. How much of that was making a prediction of the flows based on the theory that people will continue to sell over fears of tariffs and so forth? How much of it was that, and how much of it was just like dumb luck that I moved the stops and everything, and it was just the combination of taking on more risk and dumb luck. Okay, authored by Alex Deleuze via goldtelegraph.com. Okay, so that right away has all of my red flags up. Like, okay, this is somebody that's constantly pumping gold. Scott Bessent, the incoming Treasury Secretary, is stepping into the spotlight to manage the monumental task of selling trillions in U.S. government bonds. Japan has been grappling with a dramatic currency crisis, prompting the government to intervene repeatedly to support and stabilize the yen. It has spent over $100 billion in recent years to support their currency, a staggering figure. China has been actively reducing its exposure to U.S. debt as it pushes to de-dollarize, safeguard its economy against potential sanctions, and internalize its currency and navigate escalating tensions over Taiwan. Japanese investors sold record $61.9 billion in U.S. securities in quarter 3 per U.S. Treasury data. Chinese funds offloaded $51.3 billion in the same period, the second largest amount on record. Wow, really? That's so much that the amount of buying that we've seen in equities really becomes like way more stunning, doesn't it? What does this have to do with anything? The incoming Treasury Secretary has voiced support for the U.S. issuing ultra long-term bonds. Well, okay, that one makes sense. That having 50 or 100-year bonds, in my opinion, makes complete sense. Okay. A concept previously explored during the Trump administration under then Treasury Secretary Steven Mnuchin. I wish that they had done it. Whatever. However, a compelling idea is now being openly discussed by an economic advisor from Trump's first administration. Judy Shelton, with whom I recently had a conversation, is advocating for a treasury instrument that includes a gold convertibility of the dollar upon maturity. She recently tweeted about a proposal for a 50-year treasury bond convertible into gold to be issued at the initiative of President Trump on the 4th of July in 2026. I don't know about this one, guys. Like, that just seems like, okay, well, let's keep reading because I'm not quite sure I understand the point of it, but okay. Scott Bessent is a proud economic historian, and I am sure also understands the role of gold in the international monetary system. I don't know if he's a proud economic historian. He probably understands the risk of tying your currency to gold, but okay. This would come at a time when central banks are increasingly diversifying their strategies and turning to hard assets like gold. That is true. Some central banks are. In fact, global gold demand hit record highs for any third quarter during the past 3 months. That makes no sense, but whatever. Reaching 1,313 tons, a 5% increase year over year. BRICS appears to have positioned gold as the cornerstone of its financial strategy, with the UAE emerging as Asia's gold hub in the bloc's new economic corridor. Notably, the UAE has already surpassed London as the world's second largest gold trade center. The West must act swiftly to restore monetary integrity, and gold, time-tested and proven as a reliable store of value, could hold the key. I think this is wishful thinking. Wishful thinking. You know, if I then now that's an interesting thing to think about, is like if BRICS were basically became a gold standard of sorts, and there was tension, would the United States use that against them? Because nobody has more firepower in the gold world than the United States, right? Like, they could just say, all right, hey guys, like we've decided that we don't really need Fort Knox anymore, or like, oh, that would be such a wild thing to watch. But that's exactly why we got out of the gold standard, was that, you know, other countries would sell their gold, and then the United States would go into a recession, and it was a disaster. That's why they wanted to get off of. Man, is ZB going to take another leg here? Now I'm getting some volume on it. Like, especially in ZB. ZB is definitely showing some volume on this now. In fact, ZB may be leading the way, and the yield curve steepening back out a little bit. Oh, did they breach it? Nope, they touched it. Not a new low yet. I'm kind of looking at this now in the treasury. How big was it? Okay, it's like just an average sized move still. Still, I have to think, like, was the play really like I should have just called, yeah, they're gonna sell it today. I mean, I kind of said at the beginning, I was like, oh, I thought that we would be down and then they would sell it further, but we recovered, and I'm a little bit surprised by that. But it wouldn't surprise me to see some selling later. And we did. We did, right? So, should I have made that? I mean, I would have made money and I would be happy with it, but I don't know if like that's actually the most optimal way to execute on our strategy. I guess, you know what? I think I think that if I was really paying attention and really trying to take a trade in here on this and everything, that I probably would have sold the treasuries. There certainly was some points where I was tempted and concerned that it could flip back up, though. So I don't think that I would have caught very much of it. Dang, it keeps getting down there and then comes all the way back in the E-mini. Anybody scalping with a smaller stop than me would probably be super frustrated right now. Where is the new... Oh, is there a rollover instrument manager? I don't know. I guess maybe there is, huh? I'm not familiar with how it works though, because I'm not using the beta version. I just did it manually. Oh, interesting. Bitcoin has tracked global M2 with a 70-day lag since September of 2023. Thinking about, yeah, I should have moved it up a little bit. Should have moved it up to that 6011 because we're running out of time. I guess we got 30 minutes, but still. Oh, okay. So it should note that we did get a change. So resting orders filtered was looking like mostly noise, but we have had a change here. So I don't know if I would read too much into that though, because it's on the old contract. Rollover is probably, we have a reason to believe that these things won't be as useful because of the rollover, but maybe tomorrow and certainly next week it could be stronger. But despite being in this tight range, there's still been a little bit of selling in this range. So it does look like that they've perhaps formed a hole. D says the 55 bid reloading. You're still on December. Do you have So I have used Sierra charts. I've kind of done a little bit of testing of building things in Sierra charts to see how hard it would be to convert them over, but I have not done anything with the back testing. So that was kind of one of the bigger things holding me back on the, like, let's convert our indicator suite over to Sierra charts. Is like, well, will the caching and the back testing thing work as well over there? I'm not as sure. And I've never really heard of anybody, doing back tests over there. It's never even heard it discussed, so I don't know if it's what's with that. Probably it's a lot harder to write back tests over there, and so not as many people do it. Yeah. I think that at some point in the future that converting our indicator suite over to other platforms could be in the cards. NinjaTrader is kind of buggy. NinjaTrader 8. So if you just only have stock NinjaTrader 8 and no custom indicators on, you'll probably not have problems anymore. But I will have NinjaTrader crash on me from time to time because I'm doing weird, crazy things, right? But it's certainly not as stable as Sierra charts. That's probably. Just checking here, bouncing up a little bit. Is it significant? Nah. The S&P 500 doing anything? I think that I'm just gonna kind of let it ride until our session is done. Okay. Anyways, yeah. So we could convert it over to other platforms maybe at some point in the future, but the focus right now is going to be on, promoting the suite that we have, because I think that we have a really powerful set of tools here that allows you to investigate data that retail traders did not have the ability to do before. And so we want to collect data, we want to do analysis on that and promote those. And, then as we get bigger, as we grow, we have more people that have bought it and everything, then I can use that to expand either into other platforms or making our own platform. I think making my own platform is what I would really like to do the most. That'd be a huge project. When I looked into that over the weekend, like some of the parts, like, okay, like making a chart is not necessarily the craziest thing in the world because I've already done basically drawing charts and things like that. The data side, I don't have a lot of experience with like making the end connector. Like I'm always getting the data from something that's already in there. But I think that that one's not too hard. It's work, but it's something that I understand generally what to do. But then there's other things like workspace management and the overall platform and all of these sorts of things. They're like it's just a huge project. It's a huge project. I really would need multiple people. So what we got to do is we need to get, enough people buying the indicator that we can support paying employees and building it into a platform. And support doing it, because when I looked at it right now and see our charts, there'd probably be like 5 of you that would want to get them, and then what? So we need to build our success in NinjaTrader and then transition. Wow, now we're on negative. Actually, this latest bar is a little bit more concerning, but I'm gonna try to. It's very interesting to me that like the trend in the treasuries looks very clearly down, but then the equities kind of looks like just a mess. Maybe they're gonna turn over and bust the highs again. It kind of seems like that I was. Well, I think I'm right about what I'm going to say here. I think that I did predict the flow in ES. It's just it wasn't as strong as I thought. It just wasn't to the magnitude that I thought. So maybe I would have been justified in taking it off a lot sooner. ZB seems to be popping back up here a lot more than the other instruments. Okay, so there's definitely now another switch in the... that's weird. How much time do we got left? 15 minutes? Well, that might be enough time for something interesting to happen. So let's not get discouraged yet. 2/3 of Americans think Trump tariffs will lead to higher prices, poll says. Oh, interesting. But they still voted for him, so maybe Americans understand the negative consequences of tariffs and maybe think that it's still worth it? After tomorrow, my first internship interview. I didn't prepare much. Do you have any tips? Is it a software internship? That's why you were asking about like leak code stuff, huh? Yeah. It depends on where it is. Granted, a place that's doing internships is probably the type that would ask you. So what I would suggest is make sure you know how to reverse a linked list. That's the one that everybody, if they're going to ask you complicated questions like that, that's the one that they love to pull on you. Because most people don't have it memorized, and so you have to kind of sit and think it out yourself. And that's why they like to use that one. No, there's stuff online. Just well, let's see if I can find it. I'm not looking for a specific page, but just interview prep reversing linked list. Reverse a linked list. There's a YouTube video. Interviewing.io, huh? Oh, I think that would be sufficient. I would just read an article or two about that. Do that sort of a thing. Who knows if they're, I don't know what they're going to be like. It's always constantly changing. I've been wondering with it, again, I'm constantly confused or shocked at the condition of the labor market relative to the headline numbers that we're getting. Like the numbers suggest that the unemployment is really, really low. Okay, if unemployment is really, really low, why are people having such a hard time finding jobs right now? It doesn't really quite make sense to me. But I've been wondering, well maybe it actually is that, okay, the number of people that are looking for jobs is still really, really low. Let's just discount the last months where the job creation numbers were terrible. Okay, let's just forget about that one last month. Maybe the number of people that are looking for jobs is the same, and the number of jobs that are out there maybe a little bit less, but not enough to explain how hard it is to get a job. Then what's the deal? Maybe the deal is that companies have just shifted their tactics to more interview rounds, more time between rounds, etc. And so whereas before you would get hired within a week, now it can take upwards of a month and a half to get hired. And that's creating this friction in the labor market that's making things so difficult for everyone. Does that maybe explain it? But in the interviewing that I've been doing, I haven't been asked the technical coding question like that at all. I get asked about my experience with different technologies, talk about, what happened with them, what I think about those, enough to show that, yeah, I've actually really used it, right? And then that's like the most, and then that's the other thing that I find a little bit frustrating is that I really think it comes down to like how much they like you personally, right? And your qualifications. So I guess I probably need to work a little bit harder at being like super personable. I was feeling better about this in the e-mini, but then it popped back up there. Well, it is soon enough that let's just move it to the 50 there. Well, Reddit is certainly going crazy about the tariff threat last night. Did you hear about Elon Musk's WR in Diablo 4? Yes. That he's been doing like professional, like he's like at the top of the pro ladder or something like that, and it's like, how is he doing this? How is that possible? Yeah, I don't know. Probably cheating or something, or paying somebody to do it for him. I don't know. I don't know how that guy would have the time to do that. I don't know. I kind of feel like that there has been so much political hair pulling about Elon Musk that I kind of like ignore anything about him now, because I just don't think that you're gonna get any accurate or useful information coming from him or about him, you know. It's just a mess because everybody has some sort of an opinion, some sort of an agenda about Elon Musk that they're trying to push now. It's just crazy. It's just the guy, guys. It's just the guy. We don't really know him. That's the other crazy thing to me, is that you know, you got public figures and people think that they really know these public figures. It really does. I saw somebody talking about this the other day in a different context, but they're basically saying that, like, you know, like we're in a simulation and you essentially get to a point where the simulation becomes more real to people than reality, right? And I do think that we've gotten to that point. Like, there are definitely people out there that are chronically online where what's going on online is more real to them than what's going on in real life. And so, like, these people, they care more about what the public's opinion of Elon Musk is than they do about, like, their own familial issues. All right, well, we are to my stopping point. We got one last thing to do, and that is to test my cumulative delta here. You can see that it's colored over here. And when I refresh the chart, we've got to check two things. And that one, we've got to check that this is still colored and this is still gray. And two, that it doesn't write the same set of data in there twice. So we're going to come in here and press F5. Says it's calculating. Damn it. It didn't work. Wait, did it spit anything? It probably is set to not. Yeah, it didn't spit anything out to us. I still got some work to do, guys. Still not working correctly, I don't think. Oh wait, actually I can do this one thing, which is like no, I have to do it like this. I have to make sure that this series is visible or it won't show. There's this one that wasn't recorded live. Make it lavender, because why not? Why not lavender? No, it doesn't pull that it was recorded live on all of those. What? But why not? What's the difference between the NinjaTrader cumulative delta and your cumulative delta? Mostly that my cumulative delta caches data. So like if you were to go into NinjaTrader, I wasn't even showing you guys the screen. I'm sorry. Anyways, if you go into NinjaTrader and you want to view the cumulative delta for the last 9 months, it's probably going to take your chart like 90 minutes to load up, right? Because you have to have tick replay turned on, and then it's going to have to replay all of those orders for the last 9 months, which is forever, right? My cumulative delta it caches the information. So it will pull up the series instantly without having tick replay turned on the chart whatsoever, if you've loaded it up before or you recorded it all live. So that was the thing they were testing, is that there's a data series in here that tells you whether it was recorded live or not, because there's the live ones, and then there's the ones that have been reconstructed from tick replay. So this should be colored, and it's not. And it's saying live replay is not, recorded live is not on there for any of those. So then I'm gonna come over here. Yeah, HX cumulative delta 26. Yeah, so see, recorded live is that last one. Okay. So it is recording it in the cached file. So the indicator is just not loading that information up correctly. For NinjaTrader, can old drawings cripple the platform? Okay, so I think what you're asking is, like, if I have a chart that has like 1 trillion drawings on it, yes, every drawing that you put on there is resource utilization that takes up a certain amount of processing power and memory. So it makes sense to like delete drawings that aren't relevant to you anymore. And if you're making an indicator that adds drawings to the chart, to like limit the number of drawings that it will make, or do it without drawings, is another choice. So I have this one indicator that is I created with a friend of mine. That's kind of basically, it's like zigzag, and it adds drawings onto the chart. It adds, like, whenever there's a pivot, it makes a line that goes out until prices come back and close that gap again. And so you can have a lot of those lines on there, and you can tell, like, as soon as you put that on a chart, the chart doesn't move back and forth as well. It's more chunky. It's, things like that. So yes, wouldn't say cripple the platform, but especially if you don't have a nice machine, it can be a little bit of a burden. Oh man, so I tried to oh okay, never mind. It's just we kind of came up here. Well, I'm just gonna it is my time, so I'm just gonna take the loss there. There was points at which it was more in my favor, but it's the sim trade on S&P 500, so I guess my bigger issue is that I still just don't care enough about the S&P 500 because I truly believe that it's mostly random. Yeah, good game. Okay, so I just want to remind you, if you want to check out my indicator suite, you can do so for free. You get a free 2-week trial, so you just go and download and install it. It'll be installed. They'll work for 2 weeks. And then if you want to use them after the 2 weeks, you have to purchase the live license. It's a one-time lifetime license fee of $100. So it's super cheap. It's for life. Really, really good deal in my opinion. And I'm planning on increasing the price at some point in the future. So I would get it sooner rather than later. Also want to make sure you see the links in the video description, especially for the jigsaw trading and oh, actually, need to make sure I give you the new link. So if you want to buy Jigsaw, use this link because that'll give you $100 off this week only. But then we also have links for like my Twitter account and Discord. I'm really easy to get a hold of in Discord if you want to ask me more questions. I was just on another thread there. Somebody was saying, like, do you offer mentoring or anything like that? No, because you can just come and talk to me anytime that you want. Like, this live stream is kind of like group mentoring to some extent. So You don't have to pay for it. That's a free service. Maybe I should charge for it. I bet I could probably, charge people $1,000 and they'd be grateful for it. But nah, I don't think that I really want to. The work and making sure I'm available and everything all, would probably be too big of a burden for me right now. So you get that for free. All right. So I appreciate it. I will see you guys tomorrow. In the meantime, stay excellent, team.